Hey everybody, welcome back to Chipstock Investor. Very exciting day yesterday with Nvidia earnings. We'll discuss a few key points and a few key takeaways from those earnings results.
So we're approaching the end of 2024, headed into 2025, and it's time to start looking at our expectations for Nvidia's revenue for 2025 or for Nvidia fiscal year 2026. The key thing that we always need to bear in mind with this is the why part. Why are businesses investing in NVIDIA data center hardware in the first place? And the simplest explanation for this is computing performance per power usage stalled out last decade. And NVIDIA and its accelerated computing hardware has taken over in helping its customers advance the amount of computing power they can crank out. And the natural fit for this is, of course, in data centers, in the cloud, enterprise computing. And so this is the overarching theme that we need to focus on. And this trend of scaling computing power per energy consumption is still very much in force.
Let's focus in on the data center and the overall year-over-year change, and then we'll discuss what the outlook is in the upcoming year. Data center was up 112% year-over-year. Revenue came in $30.8 billion. And then total revenue, including all of those other segments for NVIDIA, came in at over 35 billion, up 94% year over year. The fourth quarter outlook for fiscal year 2025, revenue is expected to be up again to 37.5 billion at the midpoint, which would imply a 70% year over year growth.
GAAP earnings per share growth is implied to be up about 60% year over year. This is also the slowest pace of revenue growth NVIDIA has reported in almost 2 years. And again, a lot of this has to do with the scale up of the Blackwell systems. This is a brand new product. It's just going to take a couple of quarters for these things to really get rolling off of the manufacturing lines at TSMC and the other manufacturing partners for NVIDIA. We will be talking a lot more about NVIDIA's gross margins and how the scale up of Blackwell affects those gross margins on that product over on Semiconductor Insider. Link here to that membership. It's just $5 a month if you lock it in before the end of 2024. Now, Casey, let's shift our focus now to our assumptions for fiscal 2026 or calendar year 2025. What are some of the assumptions that we're pulling from this last quarterly update to help us arrive at our financial figures for this next coming year?
This is one of the statements that CFO Colette Kress made regarding the Blackwell revenue. She said the demand is greatly exceeding supply, and they are definitely on track to exceed their previous Blackwell revenue estimate of several billion dollars, and visibility in supply continues to increase. And as the Blackwell system ramps, they expect gross margins to moderate and be in the low 70% range. But as it fully ramps up, they expect those margins to be in the mid 70% range. Those gross margin numbers are something that we pointed out and predicted earlier in the year when we were discussing the Blackwell ramp up.
And in tandem with those comments from the CFO, CEO Jensen Huang also talked about the previous generation AI foundation models that are using a lot of NVIDIA GPUs to train. We're topping out at about 100,000 Hopper GPUs. This next generation of AI foundation models start at 100,000 and more. Will build from 100,000 Blackwell GPUs. In addition to there just being more Blackwell GPUs for this next wave of AI training, each Blackwell chip is also going to be more expensive than the previous gen Hopper chips. So you have a dual tailwind here propelling NVIDIA's revenue higher, at least our expectation for NVIDIA's revenue to be much higher once again next year. But of course, we do need to be mindful of the possibility of an industry cycle driven by inventory digestion. So at some point in the future, NVIDIA's customers will have installed enough of these GPUs in their data centers to fulfill their present needs. But is that something that we should be concerned about in this coming year?
Probably not something we need to worry about anytime soon. This is another comment from CEO Jensen Huang. He says that there's not going to be any of that inventory digestion until we modernize around $1 trillion worth of data centers. The vast majority of data centers are built for a time when we wrote applications by hand and when we ran them on CPUs. And that is just not the sensible thing to do anymore. He concluded that statement by saying, let's assume that over the course of 4 years, the world's data centers could be modernized as we grow into IT.
Stated another way, more simply, Nvidia and Jensen think we have at least a few more years of this stage of data center modernization.
So taking that all into consideration, let's talk about fiscal year 2026 and our base case for Nvidia.
Yeah, just given the trajectory of revenue and the early signs that Blackwell is going to be a very big hit for Nvidia, our baseline assumption is 200 billion in revenue for next year. It would appear Nvidia is already, just given the Q4 guidance, on course for almost reaching 200 billion on an annualized basis in Q4. Perhaps this is a conservative number. We'll have to see. But also assuming that the gross margins increase once more after Blackwell is fully ramped up, perhaps by next summer of 2025. We're assuming about 100 billion in operating income for next year, which means the stock trades for roughly 34 to 40 times our base expectation for GAAP net income. And that would also mean a 1 year forward PEG ratio, price to earnings divided by growth rate, of about 1.2. So we still think Nvidia, at least for the next year, is closer to fair value than not.
For us personally here at Chipstock Investor, Nvidia is the largest position in our portfolio, so we're not purchasing at this point. We're just holding with no plans on changing anything for the time being.
We did not make Nvidia our largest holding in our portfolio on purpose. It just naturally developed that way after investing in this business and holding over many years. Join us on Semi Insider for lots of great insights into other businesses that you can start building positions in that could become your Nvidia over the course of the next decade and beyond.
Make sure you hit the subscribe button and stay tuned, have notifications enabled. We have another video coming up that answers the question, will Nvidia kill Arista Networks?
Yeah, follow up to that video we did back in the spring on InfiniBand versus Ethernet. Arista Networks and its very close partner Broadcom have emerged as the other part of this secular growth trend in data centers alongside Nvidia. Stay tuned for that.